Is Ford Motor Company planning another huge round of direct investments in Mexico? Boston Consulting Group predicts stagnation in today's car market by 2035. And we share Morgan Stanley's top 6 technology stock picks for 2018. Hello and welcome to today's edition of Mexico News Network's Breaking News Business. I'm your host, Joseph Garza. Let's get down to the information. Ford will significantly increase its planned investments in electric vehicles to $11 billion by 2022 and will have 40 electrified vehicles in its model lineup, the company announced Sunday at the Detroit Auto Show. Of the 40 electrified vehicles Ford plans for its global lineup by 2022, 16 will be fully electric and 24 will be hybrid and plug-in hybrid models. The company currently offers just one all-electric car, the Focus Electric, the Fusion and C-Max hybrids and plug-in hybrids, and the Lincoln MKZ hybrid, for a total of 6 electrified vehicles. Ford Motor is remaining tight-lipped on exactly where and how it plans to allocate that investment across its electric range, which leads us to believe that a sizable chunk of that investment will come to Mexico, where they recently moved all of their electric SUV production. The company is no doubt keen to avoid another spat with President Trump like they had last year over the company's plans to continue shifting its production to Mexico and China. However, if the $11 billion is going to be injected into the company's existing electric vehicle plants in Mexico, expect Trump to agitate over the decision and browbeat again on NAFTA and his beloved wall in the coming days. Following on from this story, Boston Consulting Group's auto industry researchers are convinced of one thing: the sources of profitability in the auto industry will change profoundly by the year 2035, and traditional automakers are likely to take the hit. By then, BCG says, the new mobility technology, from cars and autonomous battery-powered components to data transport and on-demand services, will account for 40% of the industry's profits, while profits from traditional sources such as the sale and financing of cars and aftermarket parts will continue to decline. Of course, everything depends on how future mobility develops, and the BCG crystal ball is probably no better than any other. The company predicts that by 2030, approximately half of all new cars sold worldwide will be electrified, including gas-electric hybrids, and 1 in 10 will be self-driving. BCG also predicts that 10% of passenger trips will occur in shared vehicles, mostly autonomous electric vehicles. However, opportunity remains. In general, the mobility industry will continue to grow, says BCG, which predicts that revenues will increase to $5.8 trillion in 2035 from $3.7 trillion today. And profits should increase 3% a year from $226 million to $380 million by 2035, although most of that growth will come from new technologies. In other news, technology stocks have been a beacon of strength in the stock market for much of the 8.5-year equity bull market, and a big driver has been internet companies. In 2017, the S&P 500 Information Technology Index surged 37%, outpacing the next closest sector by 15 percentage points and nearly doubling the return for the benchmark. Out of the 68 companies in the group, a whopping 61 posted a positive return for the year. But what about 2018? With stock-picking conditions the ripest they've been since the tech bubble, there are still plenty of money-making opportunities in the industry. Our friends at Morgan Stanley have put together their top 6 picks that they think could outperform in 2018 tech. Grubhub is 3.5 times larger than its nearest competitor with 50% more supply, which we believe better positions Grubhub to continue to drive the budding online food delivery industry. We're also bullish on Zynga and see them in the beginning of a multi-year turnaround driven by a live services strategy that started with poker and should translate well with other Zynga products. The digital transformation at Activision Blizzard is still in its infancy, but it will lead to better than expected earnings per share growth over the next 3 to 5 years. After underperforming in 2017, our Street Easy monetization math shows a high margin $300 million revenue opportunity for Zynga. We also remain positive on Facebook as we expect continued ad beats ahead as Facebook increases its video focus and changes its algorithm to push more long-form video content. And finally, we believe Amazon will continue to grow 20+% with the highest margin revenue streams coming from subscriptions, advertising, and credit cards. And finally, let's turn to the markets. The Mexican peso increased 0.13% to 18.7945 from 18.7695 on the dollar in the previous trading session. On the other hand, the IPC Mexico increased 0.25% to 49,492 from 49,369 in the previous trading session. Well, this was all for today. Thank you again for staying with us. I'm Joseph Garza. Remember to follow us on Facebook, Twitter, and Google+. Log on to MexicoNewsNetwork.com for more information on Mexico and the world. Until next time.